I'm Dan Fitzpatrick at stockmarketmentor.com, and it is Thursday, January 14th. Look, every trading day, at least a couple of things happen other than me getting out of bed. First, opening bell rings, and second, at some point during the day, I've got CNBC on to see what happens. So what I'm trying to do in this video series is look at three stocks that are the most topical, at least, and the most interesting, pass on my observations to you, and together, hey, let's try to make some money. So these are three stocks I saw on TV today. First, Shake Shack. The CEO was on this morning talking about their new chicken burger, which is kind of like Chick-fil-A, only nothing like it. And he was also talking about Chipotle, which I thought was pretty cool, where he was just saying like, hey, you know, we support those guys. We're sure we're going to get it figured out. But the bottom line is this. Shake Shack has been, I mean, it's just absolutely been dumped on since peaking here. It's lost, as I'm doing this video, 2/3 of its market cap. So my question is this stock done going down? Now, what's the catalyst for a move higher, for a quick reversal? Is that earnings? Not so much. They're in March. So this stock has some room to go on the downside. What's working in its favor, in my view, is this. Today's low was 30 bucks. That's the even number. And I can see a lot of folks looking at this saying, and I'm talking about money managers, not, you know, Billy Bob with his little $5 trading account. A lot of folks will look at this and say, hey, at $30, I want to buy this stock. It is still super expensive. Their revenues and earnings growth are good, but their PE is huge. So that's an issue. If you are going to buy this stock, I would suggest you keep a stop just a little bit under 30 bucks. Look, the trend is low, but if I had to choose right now for either buying or selling, I would buy just because of the way this pattern has unfolded today. Heavier than average volume, big down day, intraday reversal, and it's closing near, you know, we'll just say at least in the top half of the range, which is like new, you know, hadn't done that in a while. So that's my suggestion here. Keep a stop under 30 bucks if you want to buy this stock. By the way, you know, you could also sell puts at 30 or even a lower strike price, and then if the stock gets put to you, great, you got it at a low cost basis. If the stock doesn't get put to you, that's called free money. Okay, GoPro, you know, they reported after the bell last night that, you know, they lowered guidance, they're, you know, kicking out some employees, et cetera, et cetera. And my suggestion was, look, this stock could go really low. I mean, I suggested, though it wasn't a guess, it was just me saying, hey, this thing could even go into the, you know, below 10. But my point was on the trade, wait for the stock to open up, and you only buy the stock if it is above the opening print. Now, this is what happens just on the 1 minute chart during the day, in the morning. Okay, stock opened up down here. This was the high after the first minute of trading, you know, right around 1175 or so. You could have just bought the stock then and put a stop a little bit underneath. We'll say the low was 1126, so you got a 50-cent range. You know, put a stop in the teens here. I mean, a very, very tight stop, since the stock already gapped down so much, and the only reason you're buying the stock is because you believe this is overdone. So you put a stop just a little bit below the low here. I'd call it 1115. You put a stop at 1115, and you're riding that thing. You're riding that thing all the way up. Now, as I do this, you can see the stock's tailing back a little bit into the close, a lot of selling pressure, but the bottom line is the trade worked, and that's all I wanted to show you. I haven't been a fan of GoPro actually ever since I heard what GoPro was as a publicly traded company. I thought it was a nice camera company, and that's about all. So take that for what it's worth. I wouldn't buy it other than for a trade, by the way. I'll just kind of sum that up. And because the trend is just horribly down. They report earnings on February 3rd. I could not even tell you where the stock's going to go. It might go up to 20 bucks. It might go down to 10. I just know that for now, you had a good trade to the long side. Adhere to your stops, and you can't go too far wrong. Okay, JP Morgan reported earnings this morning. They beat estimates. The stock jumped up a little bit, but this is almost like kind of a nothing done. I mean, it's not a bad thing, but this is an inside day where yesterday's open was right here. Yesterday's close was right down here. Today's trading is completely engulfed by yesterday's trading range. So this is basically traders looking at each other going like, well, what do you think? Well, I don't know. What do you think? You want to buy it? Not really. Do you want to sell it? I wasn't really thinking about it. So the point is with JP Morgan, look, the trend is still down. Goldman Sachs, trend is still down. Morgan Stanley, trend is still down. Don't be a true believer. Don't believe that this is the bottom in JP Morgan. The stock's just consolidating after reporting earnings, but this is a stock that I would not be eager to buy. And if you are long it, by the way, use about 57 bucks as your reference for stops, because this stock has fallen out of a volatility squeeze. It's really not showing too many signs that it's going to reverse. In fact, as it falls, the volume's picking up. Okay, anyway, that's my video for 3 stocks I saw on TV. Hope you're liking it. If you are, please tweet it out to your friends and definitely subscribe to our YouTube channel, stockmarketmentor.com. See you next time.